Folks, I got something really big for you today. I want to talk about one of the most controversial and talked about stocks out there. Yes, Tesla. How did you know I was going to talk about Tesla, right? Well, shares are up about 280% in just a few months, I think 3 months. Just Tuesday, the shares jumped up 20%. On Wednesday, they were down 12%. The stock is all over the place. The volatility and returns that it's delivered lately are more in line with what you would expect from a penny stock, not a $150 billion company. So today, we're going to take a deep dive into Tesla and see what's likely coming up next for the shares. But before we do, I've got some good news to share with you. Rob Booker recorded a training on how anyone can collect $1,050 or more every Monday morning. That's a lot of money. It doesn't involve buy and hold, investing, or anything you've ever seen before, but it's extremely easy. The video's coming down soon. Make sure you click the link below. Watch it now. Folks, I want to talk about Tesla. I've been getting so many emails the last 72 hours, I don't even know where to begin. Everybody's asking me, Roger, how high up is it going to go? How low is it going to go? Is it going to crash? What do we do? Do we buy? Do we sell? Do we hold? Let's talk about it. Number one, rule of thumb. As a rule of thumb, whenever you see volatility increasing in a huge amount, it usually means that the top is in place. Not always. And it doesn't necessarily mean the stock is going to start falling down. It means it can still congest near that level for a good long time. But what you do need to know is typically when a volatility increases 5, 6, 7, 8 times as much, it means institutional traders are liquidating. Let me explain to you why. Let's say you have 100 shares of Tesla, all right? And let's say you bought Tesla around here when it was fluctuating about $30 a day. All right. And here it's fluctuating about $200 a day, about 8 times as much. $30 versus $200. Well, if you have 100 shares of Tesla, your volatility is $3,000 a day. Whereas right now, right here, your volatility is about $20,000 a day. That means your movement in your account is $20,000 instead of $3,000. With just 100 shares. Now, if you're an institutional trader, you have a lot more than 100 shares of Tesla. You have probably thousands of shares of Tesla. So just to maintain the same exposure, you would have to liquidate about 85% of your share, which is why Tesla is moving lower. In addition to that, and which is why massive increase in volatility usually tells us that stocks are overdone and are ready to move south. And this is the case. Now, it could be that Tesla may stick around this level for the next 3 or 4 months, but the odds are it's going to come back to the 50-day or the 200-day moving average. It's going to reach neutral levels because it's grossly overbought right now, according to the RSI oscillator. And then after it consolidates for several months, it'll begin moving higher once again. But that can take several months. We may have to wait till next earnings. Now, that's the technical picture. So right now, you're seeing short covering in the retail traders, and you're seeing professional traders, hedge fund managers, pension funds, institutional traders reducing or lowering their exposure because volatility is about 8 times higher. Technically. Now, fundamentally, the stock was downgraded by Canaccord, all right? It's a big company, downgraded the stock from a buy to a hold. It believes the stock is overvalued, and I also believe the stock is overvalued. The exposure on the stock also has a lot to do with China, and a lot of traders aren't talking about it. But some, I'm not sure if it's Model 1 or 3, but some Teslas are made in Shanghai. They have a big factory there. And the coronavirus is very prevalent right now. And we don't know how many people are going to die eventually, how many people are going to be affected. Remember, transportations to and from China, export, imports, it's all being affected by this coronavirus, and we have no idea what it'll do. So I believe part of that is pricing into Tesla stock, and one of the reasons why it's moving lower right now. So again, I wouldn't be buying Tesla stock. I would be writing calls. I would do bear call spreads because volatility is so high right now. But I wouldn't take a directional position on the stock till we see more predictability and till we see the implied volatility, which is what we're seeing right here, move back in line with the historic volatility, which is about 8, 9 times lower. So right now, I would stay away from Tesla. I would wait for the risk level to be lower and then make my move after that. Folks, thanks for watching this video. Make sure you check out Rob's training by clicking the link below. All it takes is 3 clicks, just 3 clicks of the mouse, and you can start collecting steady stream of income. this week. The replay's coming down soon. Make sure you check it out now. Do it now.